Hi there, welcome back to Closing Trade. In a short while from now, post-market, we'll be getting the numbers for the CPI numbers that are going to be out. That's our consumer inflation numbers, and that's likely to have eased to a 6-year low in the month of June. My colleague Varun is joining us with the factors at play and what number can we expect to see in a short while from now. Varun.
Well, so the Reuters poll says that the CPI number this time is expected to be around 2.5% versus 2.82% on a month-on-month basis, and this would be more than 6 years low. In fact, this would be continuous fifth month that the CPI would be below 4%, that is a medium-term target of RBI, and in fact this would be the longest stretch in nearly more than 6 years that the inflation has stayed below the RBI's medium-term target of around 4%. Now, there are many factors which are leading to the reduction in overall inflation. One of them is the easing of food prices, and also because of the high base, because if you look in the previous year, in this month, the overall vegetable prices were up by around 30%. So because of that high base, we are seeing that the CPI is likely to moderate to around 2.5% in the current month. Although some of the economists are also expecting that this would be the bottom of CPI, this or the month of July would be actually the bottom of CPI. So let's see whether it's the bottom or not, but in this month, in fact, in the month of June, the overall CPI is expected to be around 2.5%. That is what the Reuters poll say.
Our estimate is lower than what the Reuters poll was indicating at 2.5. We expect the number to be around 2.2%. So yes, there will be a sharp moderation even versus the last month's print, which was again pretty low at 2.8%. This is being driven by the sequential improvement because food prices are softening, given what we've seen last year from a good monsoon and good crop sowing and crop output both for summer and winter crop. And also the base effect. So yes, there's a very favorable base effect for this and probably the next month as well. So well, surely I think this year we'll see readings below 4% band that RBI is targeting in terms of the medium-term inflation level. For this calendar year, we pretty much have numbers below 4%. Even as I mentioned, we will see numbers edging up post, say, September, October.
Okay, so that was Upasana Chachra, who we spoke to earlier in the day, and that's the estimate that she's penciling for the CPI. Reuters poll says 2.5%. Morgan Stanley estimating this to be further cooler at 2.2%, so looking very optimistic for that number. But we also have Ashi Anand joining us on the show, founder and CEO at IME Capital. Ashi, hi, good afternoon, and thanks so much for joining us. Give us your sense of the limited set of earnings that we've seen so far from TCS, DMart. All eyes are on HCL today, but given the kind of updates we've seen across the board, do you believe that this quarter could be better than the one before it?
Hi, firstly, thanks for having me on the show. It's probably just too early to comment on that at this point in time because we just kind of 2 quarters, we really just 2 companies in. I think the one important thing with a TCS is people. So what are the things that people were looking through to read through into these sectors from these company results, right? So with TCS and IT, people were looking at some kind of an indication of a kind of growth recovery. If you look at TCS's guidance, I don't think you still have clarity on that yet. And for any longer term growth recovery in IT, you are going to need some clarity around what is happening with Trump and tariffs, the impact that is going to have on the US economy, as well as overall corporate demand and corporate demand specifically on IT spends. Now, I think the other key element was actually DMart. We still, like I'd like to just mention, very, very early into the results season. But with DMart as well, you have kind of seen that growth, the whole consumer growth recovery, that is still not something which is evident. DMart is kind of still struggling in terms of trying to get its kind of merchandise mix back up to levels it was historically to be able to get back to the kind of margins that they were delivering earlier. And I think this whole new quick commerce competition, right, and the implications of that on a model like DMart, that is still something that you are sitting and trying to evaluate. The result season is going to be something which is extremely important. We are watching it very closely. We've had two key results so far. Trends so far are not really suggestive of a big growth recovery as compared to what we saw in the previous quarter.
All right, so that's the take on some of the earnings candidates that we have already seen. But in some of the upcoming earnings, all eyes will be on HCL Tech. This time, the company is expected to report its Q1. Not so great set of numbers that is expected. But let's go across to Pulkit, who is here with us with all the number crunching. Pulkit.
TCS has released its earning. Now it's time for HCL Tech. So if we talk about the expectations, for revenue in USD terms, it would be around 1% up. In INR terms, around 0.3% up. If we talk about EBIT, it would be slightly down around minus 3.4%. If we talk about EBIT margin, it would be down around 70 basis points. For profit after tax, around minus 2% down we have the expectation on the Q-on-Q basis. If we talk about the management commentary, deal wins are likely to be stable, but revenue conversion would be sluggish. Services business expected to grow mild, but the products and the platform business may drag in this quarter. Europe and UK likely remain to be soft due to macroeconomic pressures. BFSI and life sciences business may remain stable. After the commentary of TCS, this can also fluctuate in a negative way, while manufacturing, high-tech, consumer goods likely to be in pressure. If we talk about the FY26 guidance that management has given in the last quarter, it would be around 2 to 5% for the whole year. For margin, it would be around 18 to 19%. The key points that to be focused in the management commentary would be on the demand outlook, how the demands are shaping up. FY26 guidance, will they change it or it would remain stable? The discretionary spend outlook from the clients, deal pipeline, Gen AI adoption, headcount and attrition rate, and the most important thing, that is geopolitical tension and tariffs. These are the things that we need to look for at HCL Tech.
Okay, all eyes are going to be on HCL Tech's numbers post-market today. But come tomorrow, we have another Nifty 50 major coming out with its numbers, and that's HDFC Life Insurance, all set to report its Q1 earnings. Let's go across to my colleague Varun Arora to get us more details on what the street is penciling in when it comes to this insurance major. Varun.
Yes. On HCL Life, we are expecting good set of numbers. The AP is expected to grow by 13.7% on YY basis, driven by the low double-digit retail growth. And VNB is expected to grow by 15.2% on YY basis. Keep an eye on the VNB margin, where for the last 3 quarters, the VNB margin expanded by 220 basis points. Now, this quarter, we are expecting them to grow by 30 bips to 25.4%. This would be driven by the stable product mix. Also, keep an eye on the going forward guidance on the sales through bank sales and agency channel, product mix, and the management commentary on the VNB margins going ahead.
All right, thank you so much, Varun, for getting us all those details. So HCL Tech, not so great set of numbers that I expected, but either on the other side, it's life insurance counters that have been doing well. Well, of course, all eyes will be on HDFC Life as well. But Rashi, just wanted to have your take on the whole insurance pack, because from general insurance and even from the life insurance, the month-on-month growth data has been quite stable. What is your overall sense on the insurance space, and any particular segment within that you're finding attractive at this point in time?
Yeah, sure. So insurance is a space that we do like. It is also there in currently in our portfolios. What we do particularly like about insurance is the fact that valuations have kind of come off quite significantly. And if you kind of try building out longer term growth models, you really aren't factoring in very robust growth in a sector which is still highly underpenetrated in the Indian economy. And just as financialization of savings continues, you are going to kind of continue to see decent growth and kind of penetration increase. So this is the space that we like. We see it as a very attractive longer term buy and hold kind of a play. What you are going to see, however, is kind of month on month and year on year volatility in kind of numbers. This actually happens for a couple of 2 or 3 key reasons, right? And this is what's been impacting performance for the sector over the last few years. I think the first element is around the state of the equity capital markets that does have an impact on kind of ULIP growth. And the margins that these companies make on ULIPs versus other products, that is actually quite different. ULIP is a lower margin product. And because of that, whenever you do see a strong equity market environment, you see positive APE growth. but that is very often accompanied by a certain amount of margin pressure, and which is where I think the core number that we tend to focus on is the growth in absolute VNB. That is now that is something which we believe over the next 5 to 10 years has the potential to continue to grow in kind of early teens, as is what you've been seeing over the past some amount of time. And that for when you can kind of buy companies at 2.5 times price to EV, that is not something which is very expensive, and which is why we do like the space. The space has not really performed as much over the last couple of years, and this has been because you have seen kind of changes in underlying regulations. Some of these regulations are actually helping make the sector stronger from a longer term perspective. So we actually kind of see it as a space which does have kind of room to kind of grow, room to outperform. As growth comes back, we actually expect the space to do quite well.
Okay, so that's the take on the entire insurance space. Aditya, let's move away from that and talk about some stocks that are sitting pretty at life highs right now. Two of them, as of now, Laurus Labs and Ramco Cements. We wish to talk about good move coming in on Laurus Lab yet again today, up more than 4%. Aditya, give us a chart check on Laurus Labs and Ramco Cements, and if you're spotting further upsides given that the stocks are already at life highs.
Sneh, so let's first talk about Laurus Labs. I think so. There
Yes.
is still up move left in the stock. There's juice left in the stock because clearly it has broken out from its previous all-time high of 720, and from their stock, though has shot up 100 rupees more, but I still see more room on the upside. So if you get any kind of a correction close to about 810, 800 odd levels, it's a good time to latch onto it. Even at current levels, I wouldn't shy away from deploying some part of my money to the stock. I'm looking at a target of 1,000 rupees approximately in Laurus Labs over the next 2 to 3 quarters, and I think so this is something that should be met really soon. And if we talk about Ramco Cements, this is also one space, cement as a whole, which has done phenomenally well for itself. Talk about Ultratech, talk about Ramco, talk about JK Cement, all of them are looking attractive. In particular, Ramco Cement, that is also looking interesting to me on the chart setup. One can initiate a fresh long here for a target of 1200 on the upside. If you already have it, keep trailing your stop losses. Closer to about 1100 is a good support area for the stock. So that should be a stop loss, and look for a target of at least 1200 to about 1250 on the upside as far as Ramco Cement is concerned. So cement as a play, I think, is going to continue its outperformance at least for next 1 month. And Laurus Labs, I mentioned, continues to gain strength to strength. So that is also positive.
All right, so that's the take coming in on Laurus as well as Ramco. Both stocks are at the life high points, and along with that, cement as a pack continues to do well. But Sharon, wanted to have your take on CEAT, because that is the stock that we have been talking about, and within the whole tire space, renewed sort of an interest is what we are seeing. But particularly with CEAT, what a move! Almost a 5% jump yet again coming in on this stock. Anything in particular you're spotting with respect to the pattern, the kind of volume build up?
Shristi, as we spoke in the morning on CAD, I think it's about 5% from after we spoke about it. Again, it has given a breakout of a small descending trend line. And as I said before, it will retest its high of around 4050. Again, nothing has changed. The view remains same. Very high volume accumulation since April. And even in the last week, you could see higher accumulation on green candle days. And even if you see charts of like Bal Krishna and MRF, all are almost hitting its MRF again. It can hit its all-time high anytime soon. So again, I think something is happening in the tire space. I can't pinpoint exactly what the news is, but something is happening. I think if anyone has a position, do stick to it. I think you can see much higher levels in the whole space in the coming weeks.
The whole tire space is actually doing very well, and one of the factors is actually the upcoming earnings, because the management have already highlighted for majority of the companies that the lag impact of a softer RM basket cost can actually kick in terms of the margins, and they are expecting a recovery in the first half of this fiscal and beyond, depending the crude oil prices. But Ashish, just wanted to have your take, though on the auto OEM side, nothing much is happening there, but everybody just talks about to be with the auto ancillary space. So do you believe the tire is a good bet for that?
So rather than specifically tires versus not, right? As in, if I can just address the whole auto OEM and the auto anch debate, and why kind of people are possibly some level preferring auto anchs. What you are kind of seeing happening in auto OEMs is that competitive pressures have increased quite substantially. And this is especially true when you kind of take into account the impending shift towards EVs. If you're looking at kind of two-wheelers from a very cozy kind of three-player market between your a four-player market, your Hero Honda, your Honda, Bajaj, and TVS, as compared to this, you now have new EV entrants coming in, and you really don't know how market shares under the new EV landscape would actually shape up. You are also seeing something similar happening in passenger vehicles. While the EV shift is a bit slower, what you are clearly having here is Mahindra and Tatas have clearly gotten their act together and been able to kind of gain significant market share away from the erstwhile Maruti, which is really dominant. You also have new players like Kia and an MG come in and take in certain levels of market share. Now, as the space also moves towards kind of an EV mode, you really don't, as of right now, have visibility on how market shares are going to play out and how longer term profitability is going to play out under the new EV mode. And this is what makes it quite difficult to really take a longer term structural call on auto OEMs. And this is where certain market participants are saying if you can identify auto anchors that are engine agnostic, so which are not dependent on is that particular ancillary part going into an ICE engine or an EV. The requirement is there across both vehicles. These become a much easier play to play this larger discretionary boosts in consumption that you're likely to see in India. And I think that is really where auto anchors and say, and which is where kind of tires kind of do fit in, right? Tires aren't really dependent on the kind of vehicle that you're going into. In the current kind of quarter, you are, as you had mentioned, going to have a bit of a margin boost because of easing raw material prices. But that's more of a shorter term thing. I think the core call is auto anchors that are not engine dependent actually have greater growth visibility as of today, as compared to when you are kind of dealing with auto OEMs where market shares, EV transition, there are multiple kind of balls up in the air and you don't really know where they're going to land.
Okay, that's the take on the entire auto ang space and the OEM space. Let's shift focus from that and talk about Bitcoin, because Bitcoin has extended its rally to rise to a new record level above $120,000, driven by strong institutional inflow and optimism around crypto-friendly policies under the new Trump administration. The world's largest cryptocurrency has now gained more than 29% on a year-to-date basis and over 100% in the past 12 months itself. Kanishka is here with all the details and the rise of the cryptocurrency that we've seen lately. Kanishka.
Well, Bitcoin is back in the spotlight, and how? The world's largest cryptocurrency has blasted past that $120,000 mark, clocking a 31% gain in 2025 so far, even outperforming gold, silver, and equities. So what's powering this rally? It's being driven by strong inflows into spot Bitcoin ETFs, which are attracting significant institutional interest. There's also growing excitement ahead of Crypto Week in US Congress, where key crypto-related legislation could be tabled. In fact, expectations of monetary easing are adding further fuel to the rally. Now, adding to the momentum is a massive short squeeze with over $1 billion in bearish bets liquidated, pushing prices even higher. Market sentiment has turned decisively risk-on, supported by Trump's pro-crypto stance and a broad surge in altcoins. Over the last 7 days, Ethereum has risen 18%, XRP 30%, and Bitcoin 13.5%. And when it comes to performance in 2025 so far, Bitcoin's 31% gains beat gold, silver, Nasdaq, and even Nifty 50, cementing its position as one of the top performing assets this year. In short, Bitcoin is not just leading the crypto pack, it's also outperforming most global asset classes in 2025.
All right, thank you so much, Kanishka, for highlighting all those details. But Ashi, any comment on what does it really tells about the investor sentiment and the risk appetite right now? Because on one hand, not just Indian markets, I believe globe across, the equity markets are waiting for more clarity. A bit of a sluggishness is what we are seeing. But on the other hand, it's Bitcoin at an all-time high levels. Any comments here?
So very difficult for me to comment about Bitcoin. Crypto is a space that we don't necessarily understand as well. But I think what you can clearly make out, right, is what this suggests of the underlying environment. I think risk-taking appetite still remains fairly strong. You're seeing this in kind of the kind of rallies you've seen in gold, silver, as well as in cryptocurrencies. The reason your kind of equity markets are not being able to participate is that you currently have a large amount of uncertainty around Trump, what he's going to do around tariffs, the impact this is going to have on global demand, on the US economy, and how the US Fed is really going to react in terms of interest rates. Until you don't have some clarity around here, it's a little bit difficult for kind of a larger bullish sentiment to actually build and sustain. And I think which is where you're really having some amount of monies move towards other asset classes like precious metals and cryptocurrencies. But as you kind of have some clarity around this overall direction of both growth, trade, and kind of interest rates, I think that is when you start seeing equity markets possibly participate and possibly a reversal of some of this kind of big up moves that you've seen in crypto and precious metals.
Okay, so that's the take on Bitcoin and alternative asset classes right now. But Aditya, let's talk about the capital markets theme. Let's move away and throw some light on this theme, because we've seen a little bit of a sluggishness here after a period of good moves coming in, and now once again it looks like these stocks are finding a way to recover after a 2-day decline. The likes of BSE, CAMS, Angel One, CDSL. What's your take on some of these stocks on the charts?
So, Sneh, definitely from a longer term perspective, I think this is one space which is going to make money for you, and you need to allocate some part of your portfolio this space. And I would like to include AMCs as well in this. And we have seen a kind of a rotation, Sneh, happening in this space as well. So it started off with your exchanges, then it moved to broking firms, and now you see AMCs outperforming. So not really all stocks within the space are correcting, but it's more of a shift that we're witnessing in money. Talking specifically of stocks here, so a couple of stocks that we definitely like. One is MCX. I believe after a decent bit of an up move, stock did show a bit of a cool off. From here on, stock can cool off some more closer to about 7,800, 7,900 on the downside, but we believe this is a good opportunity to latch on to this. Start buying now, and maybe all the way down to 7,900 you can end up your buying position, and then in the near term we think stock can test levels of 10,000. BSC also is one stock which we feel on the downside maximum that we see is 2,300 or 2,200. It's a good time to start nibbling into this stock and end up your buying position closer to about 23, 2,200, and then eventually you will see stock crossing at 3,000 mark as well. Now, talking of AMCs, there are a few AMCs which we believe should continue to do well. Some of them are trading at life highs or maybe very close to life highs. So Nippon India Life Insurance is something that we really like, and we think this is one stock that can be part of your portfolio by current levels also, and you can see levels of approximately 900 on the upside. UTI AMC is something that we had seen a sharp up move last week, and I believe this is something that's likely to continue as well. This was probably one of the cheapest AMCs as well in terms of valuation. I think on the upside, 1,600 is something that is possible on UTI AMCs as well. So predominantly AMC looks better than the exchanges, but we are also upbeat on the exchanges as well.
All right, so that's the take coming in on the AMCs, as well as some of these counters that are indeed in focus. With just a few minutes left before we shut shop, and for today, a mild recovery that what we are seeing on the index front, because Nifty Bank is actually trying to make that close in the green. But on the flip side, it's Nifty 50, which has once again taken a support at that 25,000 odd mark and seen a mild recovery from the day's lowest point as well. Select counters within the pharma space did well, but on the flip side, it was Divi's Lab that was a bit reeling under pressure. But Ashi, any comment on the pharma space right now? Any particular pocket that you believe is looking interesting to you right now? Because of late, the excitement was really on with respect to the CDMO players, but do you believe maybe on the valuation front, now it's the time to nibble into some of these generic players as well?
So pharma is quite interestingly poised. I think there are two or three kind of a combination of two or three factors operating as kind of headwinds and potential tailwinds. I think the one big concern that we really have is around the Revlimid base. This was a very, very large opportunity that contributed a very large percentage of overall profits for a number of Indian pharma companies over the last 1 or 2 years. And as this kind of drug becomes more generic, you are going to kind of see a base impact which becomes difficult to grow off. So while this is kind of the one key concern, and it is important to just kind of look at valuations adjusted for some of these one-off profits on Revlimid, what is very attractive, at least to us, is this whole GLP-1 opportunity. As GLP-1 drugs start coming into emerging markets, you potentially have interesting opportunities both amongst the branded generic players who could be launching their own versions of GLP-1 drugs, but you also have a number of interesting CDMOs that with specific facilities that are targeted towards this particular opportunity. GLP-1 is something which could be something quite large and quite monetizable over the coming 3 to 5 years. And it'll be interesting to kind of understand which are the companies that become the winners in this particular place. The one other key element is that there's a bit of an uncertainty around, does Trump look at kind of implementing tariffs on this particular place? It's something which is not expected, and you have heard kind of contrary news flow out here. We believe that drug prices in the US are already way too high. Increasing tariffs are not really going to solve for anything. But that is going to be a bit of an overhang on the sector until there's not clarity on what's happening with Trump and tariffs. So it is a space that we believe you do need to be a bit stock specific on, because there is a specific kind of Revlimid which is causing a bit of a base impact, and there are companies will kind of differ in terms of how well they actually monetize the GLP-1 opportunity. But if you do get the stock specific call right, I think this is a space which is definitely quite interesting.
Ashi, thanks so much for joining us. On that note, we'll let you go. Well, only a couple of minutes left to market close. Very quickly, Aditya and Sharan, just give us a take of where you are seeing the market open tomorrow, given how sluggish the session has been today. Aditya, you go first. Immediate levels to watch out for on Nifty and Nifty Bank.
So talking of Nifty, I think 25,100 is something that I closely monitor. That is where the maximum open interest to build up is on the call side. If we start to trade beyond 25,100 and trade tomorrow, my sense is you will see a 100, 200 point short covering rally all the way till 25,300. So setup looks like we could be in for a short covering rally. Just watch out for 25,100 on the upside and trade tomorrow. Talking of Bank Nifty, that is where I think you will see a real up move coming into. So 56,900 is something that I'm eyeing very closely. Above that, I think so 57,300 is something that is possible on the Bank Nifty as well. So maybe a bull call spread is something that I would play for on the Bank Nifty tomorrow opening trade.
About you, very quickly, Nifty levels and Nifty Bank.
So very similar levels, about 25,100, you can see a 100-point rally, but I'm not too positive. I think Nifty will more or less open flat towards, I think even you can see a slight cut also in the opening. You have seen little short covering in the last 10-15 minutes, I think, which more or less will, tomorrow you will start some more shorts adding it at the opening. So not too much positive, but if it closes about 25,100, yes, a 100-point rally. Again, Bank Nifty is slightly more positive. HDFC Bank currently has seen a good recovery in the last 15 minutes. And on back of that, I think you have seen some recovery. Otherwise, everything else is more or less flat. So again, a flattish kind of downward opening tomorrow morning, nothing too positive. And after tonight, I hope if Trump doesn't release any more tariffs, I think opening flat and then taking a view will be better.
Well, that looks unlikely given the fact that every morning we get to hear some new announcements, but let's watch out for that. But thank you so much, Sharan, Aditya, as well as Ashi, for taking the time out and speaking with us. So just a few minutes left before the market shuts off. So it's a goodbye from me and Snehi and the entire team. But before that, let me hand over to Ashesha to tell us how did the markets pan out today and which were the big movers. Ashesha.
Well, yes, Shrishti, we did try to recover in the second half of trade, but despite that ending in the red, at least as far as Nifty is concerned. Nifty is now down nearly 68 points, 25.85 is where it is currently trading. But on the flip side, we had outperformance come in from Nifty Bank. That one is in fact in the green, managing to hold on to some amount of gains, ending near that 56,752 mark. Broader market indices should also come up for you on your screens. Nifty Mid-Cap Index up 0.7%. Solid outperformance coming in over here, and Nifty Small Cap Index also gaining in excess of 1% in trade today. We had IT Index which was dragging the market slower. In fact, Nifty IT Index was the biggest sectoral loser in today's trading session. We had Wipro which was down over 2%. Infosys, Tech, Mahindra, TCS, HCL Tech, all of them reeling under pressure in today's trading session. On the flip side though, we had real estate stocks which were bucking the trend. Nifty real estate index was up nearly 1.5% in today's trade. We had Sobha which was up 3%, Godrej Properties, Brigade, Prestige Estates, all of them gaining anywhere between 1 to 3% in trade today. In terms of individual buzzers, we had Ola Electric. It reported its numbers, but the outlook going forward continues to remain very positive, because of which that stock is ending with the gains of nearly 20% as we speak. Divi's Laboratories, this one also recovered from the lowest point of the day. AU Small Finance Bank, where Kotak came out with a report, they downgraded the stock to sell. This stock also should come up for you on your screens. AU Small Finance Bank in focus on the back of that. BEML, the stock company will be considering stock split in the board of directors meeting that is scheduled to happen on the 21st of July. So a whole host of newsmakers from the broader markets, but on the index level, Nifty is ending with a cut of nearly 0.3% as we speak, 2587. But we saw some kind of outperformance as far as Nifty Bank is concerned. That's all the time we have on this edition of the show, but don't go anywhere. More news and updates will continue on the other side.